Natural Rubber Market Review by Mr. Jom Jacob. Let me introduce Mr. Jom Jacob. He is an independent analyst in global rubber industry with more than 30 years experience in analyzing rubber market, forecasting industry trends, and formulating long-term policies and development plans for natural rubber sector. He served the Association of Natural Rubber Producing Countries, we shortly called ANRPC, based in Kuala Lumpur, as its a senior economist for 11 years. And before that, he was with the Rubber Board of India by holding various positions for 23 years. Mr. Jom is a well-experienced rubber industry analyst for natural rubber. So let's welcome Mr. Jom Jacob.
Hey all, welcome to the Natural Rubber Market Review. So let us have a quick review of what happened in the markets in terms of price trends during last week. So today we have a table which is summarizing, consolidating the price trends in the major futures markets as well as physical markets. So first we will discuss how the prices perform in the futures market. In the Shanghai Futures Exchange, prices averaged 1.0% higher during last week compared to a week before. Last week, I mean the week ended 6th of May. So the price during the week ended 6th of May was 12,853. That is 1.0% higher compared to a week before. So we should recall that when we presented the market review last week, we made an observation at the end. So we specifically mentioned that prices are not going to rebound in the short term, and we are not expecting a major fall in the prices in the short term because prices are already at the rock bottom level. So prices have limited space to go further down, and at the same time there is no scope for market to recover. This was observation we made, and also we specifically mentioned that prices can go sideways. That means it can marginally down or marginally up without any major change. That was observation we made regarding the price trends. So as we expected, price increased to 1.0%, which is marginally higher. That means that there is no major change. Coming to psycho markets, I mean the most active contract, that is a contract expiring July, averaged 0.5% during last week compared to a week before. At the Japan Osaka RSS3 prices, I mean the October contract, which is the most traded on in terms of volume. So Osaka RSS3 averaged 1.3% higher compared to a week before. So this is a summary of what happened in the futures market. Coming to physical market at the right side of the same slide, we have STR prices, or maybe we can say TSR prices. Around 70% of the global trade in rubber is in the form of TSR. So we have two important markets for TSR. One is STR20 at Bangkok, and the other is SMR20 at Kuala Lumpur. So STR20 at Bangkok averaged 0.4% lower compared to a week before. That is a marginally lower compared to a week before. SMR20 Kuala Lumpur averaged 0.3% higher compared to a week before. That means marginally higher. And coming to RSS markets, we have two important markets. One is RSS3 in Bangkok, and the other is RSS4 in Kottayam market in India. In RSS in Bangkok market, RSS averaged 0.8% higher. That means marginally higher compared to a week before. But at Kottayam market, RSS4 averaged 2.7% higher compared to a week before. That means this increase is not marginal, a bit substantial, because this is largely due to the short supply because of the hot climates in Kerala. The production has been affected, so that could be one reason. And coming to the latex market, we have two important markets. One is latex market in Bangkok, the other market is the latex market in Kuala Lumpur. And in Bangkok markets, prices average 1.3% higher compared to a week before. But in Kuala Lumpur, latest price average 0.3% higher compared to a week before. So this is the summary of the price trend during last week. And we had to take into account that last week during most of the days markets remained closed due to holidays, holiday for the Eid as well as holiday for the May Day, and Thailand had another holiday, local holiday. So that means the market were closed during last week. Most of the days markets were open only for 2 or 3 days. And in the case of Osaka market was open only for 1 day. It was because it was a golden week holiday. So this was a summary of the price trend. Now we will see another slide which is summarizing how the market is performing right now. So we have seen the price trends and what are the undercurrents of the prevailing market trends. First of all, we have to consider that futures markets are dominated by negative sentiments. When I say negative sentiments, it means speculative traders are staying on the sidelines due to negative sentiment caused by several factors. These factors include the continuing COVID lockdown in several parts of China, Russia-Ukraine war, and the massive economic sanctions announced on Russia, and the worsened global supply chain disruptions. So these are having negative implications on the global manufacturing activities, disrupted supply, overheated inflation, and escalated raw material prices are impacting on the global manufacturing sector. And also there is a fear of aggressive interest rate hike by the US Federal Reserve, because in the next meeting of the June meeting of the FOMC, Federal Open Market Committee meeting of the US Federal Reserve, investors fear that the Federal Reserve may go for an aggressive policy hike to tame the overheated inflation. So that also is another factor keeping the speculative investors away from speculative riskier assets. So in short, we can say that business sentiment is dominated by volatility, uncertainty, complexity, and ambiguity. This is what is happening in the markets as well as business world around the globe. So this is why speculative traders are largely staying away from the markets. Now we should consider what is happening in the second factor is what is happening in the demand supply fundamental. First, we will look what is happening in the demand side. We have seen just now discuss what is happening in the global business scenario. For example, the Ukraine-Russia war as well as the lockdown in China. So around 70% of the demand for natural rubber comes from auto tire and auto component manufacturing industry. Around 75% of the global demand for natural rubber is coming from this industry. And also, China is accounting for nearly 43% of the global demand for natural rubber. So various factors we mentioned above are impacting on the global economic recovery, particularly the automobile industry, and also China is under lockdown. That means the prevailing situation can have a major negative impact on the global demand prospects for natural rubber. So the prevailing conditions, whatever we mentioned earlier, are having a major negative impact on the demand prospects for natural rubber. Now we will be that is what is happening in the case of demand side. Then what is going on in the supply side? Supply side, when we look at the supply side, the global supply of natural rubber is set to improve substantially from the beginning of May. This is because wintering off season. So we have a chart here to show what is happening in the global supply side. We have a chart here. So this is a chart showing the annual supply in a year. So this total annual global supply, that's the share of the 12 months in a year. That means seasonal, this is showing the seasonal distribution of supply. So if the total supply in a year is split into 12 months, how it is distributed? This is showing the percentage share. So this is April and this is May and this is June, July. That means starting from April, we are expecting a substantial improvement in the global supply of natural rubber from the beginning of May, because wintering off season of supply has ended and farmers have resumed harvesting or tapping in major producing countries. This is what we have seen from the chart now. And we have to consider what is happening in the supply in the case of China. China is a major consuming country, accounting 43% of world demand. And in China, China is a major producer as well. China is the fourth largest producer of natural rubber as well. And in China, the domestic production of natural rubber usually returns to normal by the beginning of May. So after remaining negligibly low for 5 consecutive months from December to April. From December to April, China's production is negligibly small, near zero. But from May onwards, China's domestic production is going up, is substantially going up or coming back to normal. That means that China has more domestic availability of natural rubber. Or we can say that China need not import too much quantity because China has a domestic supply. So China, or I would like to say China will be importing less because of the higher domestic supply. So that means the demand supply fundamental is at the moment remaining unfavorable, and the demand supply fundamental is likely to stay unfavorable until China lockdowns are lifted, because China lockdown is having a major negative impact on the global demand for natural rubber. Because as we mentioned earlier, China is accounting 43% of the global demand. So China is under lockdown. Until China's lockdowns are lifted, the demand prospects will be weighed down. Then another thing, ceasefire should be reached between Russia and Ukraine. Until that happens, demand prospects and will be weighed down because of the supply disruptions. I mean, the manufacturing industry is not getting adequate raw material and component, and that disrupted global supply chain will keep demand side down if the war situation is continuing. Then another major factor impacting on the rubber prices is the strong dollar. Strong dollar, I mean, so the rubber demand supply fundamentals. I would like to repeat: the prevailing strong dollar and the weak currencies of major rubber exporting countries can weigh on natural rubber prices. This is because when the dollar is strong, rubber exporters in the Southeast Asian countries will be getting an extra space to offer natural rubber at a lower price. So whenever the local currency is weak or dollar is strong, exporters are more price competitive. So they have an extra space to offer rubber at lower prices. And this is what is happening in the rubber market as of now. That means the prevailing demand supply condition is not favorable, and this situation is likely to continue until two conditions are met. One is China lockdown should be lifted. Second condition, ceasefire should be reached between Russia and Ukraine. Until that, demand supply situation will remain unfavorable for the natural rubber market. Second thing, sentiment remain negative in the markets, and that is keeping speculative investors away. That means non-fundamental factors are also remaining unfavorable. That is largely due to the fear of aggressive policy rates by the US Federal Reserve and a set of other factors. That means in the short term, we are not expecting a recovery in the rubber prices. At the same time, we can expect little bit prices going little bit down, because the continuing lockdown and the continuing Ukraine-Russia war are actually keeping sentiment down, as well as keeping the demand prospects down. So that means in the short term, we are not expecting a recovery in prices. At the same time, there are possibilities of prices going down a little bit in the short term. So that's all for the market review. Thank you very much. We will see you again next week at the same time. Thank you.
Okay, and that's about the natural rubber market review by Mr. Jom Jacob. I'd like to introduce about some of his activities other than this weekly program. He's giving a masterclass on the natural rubber economics. Is scheduled on 15th June. Please check the details on at knowhow-webinars.com. We have other program with Jom Jacob together. It is called the monthly program, the NR Dialogue, focusing on the natural rubber industry with various regions and markets. Next episode, which is scheduled on the 26th May, focusing on the Philippines natural rubber. We have 3 eminent rubber industry professionals from Philippines are joining this session, sharing their experience and inputs on the Philippine natural rubber industry. I welcome you all for this NR Dialogue if you're interested in the natural rubber market.